Hello, today we had the stock market moving on Fed comments. So what exactly did the Fed say and what do we need to do? Because it looks like the stock market is going back down. We're opening up our first day of June and it is a red one. It doesn't look all that bad because as we look at the technicals here, although we are going down, we can note that there is a textbook bullish pattern setting up. So I'll have a quick look at the technicals for SPY. We'll go back and have a look and see what is happening for the Fed. And then we're going to look at some levels, and then we're going to look at some charts. Hopefully you're going to enjoy today's stream. If you are, please smash a thumbs up and drop me a comment. Is it over? Are we going to do another red month, or are we going to get a move higher? So what we're looking at here is a bottoming pattern where the volume is actually very, very low. So there's something I'm going to get to in a moment after the Fed comments and actually tell you that this right here is not the most important thing we should be looking at. Options are, because today SPY traded 84 million shares. However, on the options chain, it is nearly as busy, if not busier. So what does it mean? It means that we need to pay a little bit closer attention to what is the most significant data point. And right now, it is not the share price on SPY. It is what day of the week it is, what options are looking to expire, and where there is premium to burn. So as I look here at the chart, where did we close? 409.61. Isn't that a significant area? Isn't that just below 410? It sure is. And we can note here that we do have a inverse head and shoulders pattern forming. So although the short-term price action might be a little bit choppy, when we zoom out, we have to ask ourselves too, what are we currently setting up? Well, it's June 1st. What are we trying to print? A monthly chart. So I was actually going to do from lowest time frame to highest time frame, but I think instead what I'm going to do is look at the highest time frame. And over here we're looking at the daily chart. So how do we know this pattern gets invalidated? Well, we'd have to lose 405 on a closing basis. It would be perfect if we could come back down, come into here and then go higher. I don't know if that's going to happen though. So when we look here at the monthly chart, what we have to remember is that we're not going to know what this candle is going to look like until we get to this time next month, which is the same thing we could have said about May. Oh my God, it's over. Or at the beginning, oh my God, it's bullish. And what happened? A big nothing. We went up by like 93 cents last month. A whole lot of nothing. And that's what we want to try to find out now. Is this really a big deal? Is it not? And do we even know what June is going to look like when we look on this on July 1st? I don't know. However, when we look here too, we note that there is some technical damage. We did go below 410, so cannot discount that. We are now red. We are back below our relative lows of 411.21 and 410.64. So this is not great. It means that the bears are currently flexing, and if they're going to keep flexing, we're going to see that. Looking at the weekly chart now, crap, right? Here we look at, okay, well, we broke the pennant, and that's where we stalled out so far, roughly 416. Why? These relative lows are the white arrows. That's where we stalled out. We were only able to make it to 415. So that's not really that great. This is a weekly chart. Again, there's only 2 more days left. So we got half the week because it's a shortened trading week. Thursday, Friday. So where we're going to be, again, if we get back above 416, this is going to turn into a hammer. If we now close below, it's going to look nasty. So it really depends on where we actually close out. And that's the beauty of candlestick patterns, is that we are looking at 4 data points, the high, the low, and the open and the close. That's how we form the candle, and tells us a lot of data. So the weekly chart says that this is a higher high and a higher low. What is that? It's bullish continuation. Just doesn't feel like it. Why? Well, look, remember, from the low to the high, we went up by 7.5%, up by 7.5%, down by 1. Does it really matter? If this is all the bears got, they're not looking all that great. Looking here at the daily chart, again, same thing we noted on TradingView. We look over here, we note that there is a inverse head and shoulders setting up. And as of right now, we're actually even still rocking this uptrend. So what do? We stopped going down, we started going up, and now we're testing that area. And we're also roughly testing a W here. So again, I'll just show it over here. So we look over here, let's delete the trend. Mr. W. Yeah, Mr. Red is coming back today in full force, but is Mr. Win coming back too? I don't know. We'll find out soon. And let me just get rid of all this stuff to make sure I don't lose all my charts, all my lines. There we go, we're back. So there we go. The daily chart also says that we're attempting a bull break. However, we're also below the 50 DMA, we're below the 200 DMA, and we got a death cross. So competing signals, great. This is not easy to read. No, it's not. Finally, looking at the hourly chart, what we can notice that, so So we did have another uptrend, and once we lost that one, where did we go down to? The lower uptrend. Exactly. That's what almost always happens. When we stop going up on the sharpest uptrend, and you can note here that there was an apex. An apex for me is pretty much where an uptrend meets a key horizontal line. And right here, that was 416. This 416.1 is going all the way back to our lows that we established in mid-March, sorry. So what happened? We hit resistance, we stopped going up, we started going sideways, we started going down. Where do we find support? On the lower uptrend, which is the one that really matters. This is the same one we're looking at here on the daily chart. So again, we see that exact same thing happening. Where are we? We're right at a key area. What is it? It's 412, which is green on the month. 412, 413 is green on the month. What's our high here? 41254. So are we setting up another failure? And if we fail here, again, we already noted that the daily chart is going to start breaking. The weekly chart is already bearish. We're trying to break out. And then the monthly is also at a lower low. Man, that's confusing. Yes, it is. Remember what we talked about yesterday? And then also smoothing out the data here. What did we do? Because when we were at the low, only last Friday, not this Friday, but the Friday before, we were below the VWAP, the 50 and the 200. And what happened? Well, dub, 1, 2 on the third break. So again, tested 1, 2, 3 times break bullish. Hit the 200, claim it on the first try. Back tested once, back tested twice, still actually holding it. Whoa. Now let's look back at the daily chart. So before we can actually test the 50 DMA, we got to test the relative lows. Why? We've got to make sure there's still support. That is correct. There we go. So what can happen? Maybe we got to hit it once, got to back off, hit it twice, back off, and on the third try we go for the 50 DMA. So what that means is that you need to have the patience to let this play out, because on an hourly time frame, each candle is an hour. But look, right? From here to here, that already took us, from the time we first tested it, I'd call us about right here. So from here, again, if we're going to repeat on the daily chart, that was already 6 days or 32 bars. 32 bars is a month. So what are we going to do for a month? Well, I don't know, but it's also going to be the end of the quarter. So this is going to be very, very important. And if you don't know what to do, maybe do nothing. All right, what did the Fed have to say? Here's the most important commentary. So Bullard, again, I'm taking two pieces here. We also heard from Barkin. We also heard from Williams. Wasn't really making any headlines, so I'm focusing on this. Bullard, 3.5% for Fed funds rate is a good minimum for how high policy rates need to go. Dudley sees Fed raising rates above 3% peak, now priced in market. So what this means is that the market has done a really good job of pricing it, and Bullard had a lot of comments. This is the one that I think is notable. So he's pretty much saying that 3.5 is a good start, but it's not as high as we're going to go. So that 2.5 by the end of the year is definitely still in play. The market already had quantitative tightening to battle with, and now it had additional hawkish commentary. And all said and done, it actually did not do all that bad. So that's what happened. Now let's look and see what happened to levels, because if we look here again, this is from Slack, which is our paid group. If you're interested in learning more, click on the link in the description. Here it notes that I believe we're still in a bear market, and that is because we were above 412, then we fell back below. For me to say we're now in a new bull market, we have to get not only to 412, we got to get a 428, which would mean a kangaroo, where I don't know where we're going to go. It means we're no longer bearish, we're kangaroo. And then to go to bull, we have to claim 432 to exit correction territory for the potential for a new bull market. And in terms of support and resistance, we went below 410. That is the Q1 low. So we lost the March low as we reviewed. We lost the April low and the Q1 low, which means the bears scored a touchdown. If the bears scored a touchdown and we remain in the touchdown zone, which is below 410, the bears are in control of the weekly chart. It's that simple. And if we're able to get back above 415 and make progress towards 420, the bulls are attempting to get points on the board, but it does not mean they win. It means best case scenario, they tie. So that's what we're dealing with. The bears are currently winning. And looking at the commentary from today, again, we knew that we have quantitative tightening beginning. We got payroll Friday, and also noted that we had Fed speakers today. We ended up having Barkin. I don't think he was scheduled, but heard comments from him. And then let's look here at, I'm trying something new today. It's called me being the weatherman. So at the open today, I said, again, today is the highest potential volatility day for the week. Yeah, there you go. Volatility can go up, it can be down, right? QT begins today. Fed speakers 11:30 and 1, pretty much when the market moved. Set to open back below support 1. And we're roughly at center field. So we opened roughly at midfield, where the bulls and the bears both had equal opportunity to push us higher. As a reminder, that is coming off a doji. So the doji here pretty much means that, oops, let's go back to the monthly. Doji means indecision, so it means that the bulls or bears are not in control. They're fighting for direction, and then the bears took it. So that means that the bears clearly flexed harder today. Because it's a new month. If we can hold 412 SPY, bulls are building momentum, but have to also advance for us to be in control. And that's what I pointed out here on the hourly chart when we were going up, we stopped going up and we stalled out. 416 was the resistance. Losing 412 was a sort of confirmation that we were rejecting. And holding 411 into Thursday close means we are holding our hourly uptrend. That's also what we reviewed here. So I'm calling it until the afternoon tomorrow, but it's actually closer to lunch. So what it means now is that we have to start advancing here. And if we look at the volume, again, we are going up, but does the volume give us a warning here or a disconnect between the price going up and people being excited? Well, they're excited, but they're not excited to buy. Ever since we started pushing off of roughly 395 here, we got one red bar for the close, a second red bar for the close, one green bar for the close, which was Friday, and then red, but also red. And again, looking here, we had 3 green hours, so we built up pressure for 3 hours and then released it into the close. I actually have more I want to go through, but it's already been 11 minutes, so let me try to speed up a little bit here. Because I do want to talk, actually, I'll do it right now, because I think this is actually really, really important. If you can understand this, you're going to start to understand that if you haven't traded through the summer before, which was not during a global P word, you're going to understand that during the summer, the share price is important to pay attention to, but the options matter almost as much. Looking here on SPY, we traded 85.3 million shares. How many options did we trade? Oh, that's a lot. This is just for today. Doesn't even include what happens for Friday or for the monthly or for any other chain. So when we look here, SPY is telling us that, oh man, this is busy. So again, let's first of all look at where max pain would be. For me, boom, 410. Right, that's the max pain area. Why? Well, this gets torched and all of this gets torched, so that money goes bye-bye. They pay this out. From here to here, that gets paid out. So from 411 to 415 gets paid out. However, what do they also burn? Well, everything at 410 and higher gets a burn, right? All that is worthless. What does get paid? 64 and 120. So it was more important to actually walk it back below 410 than it was not. So again, that means there was a lot of premium that got burnt today. Now let's look and see how much more volume actually transacted on the options chain than on SPY. I'm only going to count the strikes that have at least 100,000 in volume, and remembering that every one option gives you the right to 100 shares of the underlying, which means 100,000 options is the equivalent of, add 2 zeros, so 100,000, 1 million, 10 millions. So what does that mean? We got to see 800,000 in options traded today for volume to match the volume of SPY at 85.3. Let's look and see what we get, because it is higher. So here we get, where's my trusty calculator? Oh, let me just do this because I'm using a preview. There we go. All right, so first number here is going to be 120. So we got 120 again. We're looking for 850. So 120 plus 210 plus 163. I'm just going through the call sides. 163 plus 202 plus 137 plus 142. Oops. 120 plus 210 plus 163 plus 202 plus 137 plus 142 plus 173 plus 149. Oh man, there's the equivalent of 100 and basically 110 million shares just in SPY calls to trade it today. That's more than the volume on the common shares. Oh, then we're gonna look at the price and try to understand what's happening here. It might be closer to a 20-minute video. I'm sorry. I'm trying to get these videos shorter, but there's always something more I want to talk about. Anyways, let's look. Oops, it was roughly 1100, so close enough. It was like 1096. Now let's add the puts. All right, again, only looking at strikes that have 100 plus K. I'm gonna count 412 at 91 just because I want to. It's my video. 91 plus 105 plus 240 plus 180 plus 229 plus 173 plus 122 plus 170. Oh my goodness. Just in options above 100,000 in volume, there is 3 times as much transactions or volume on SPY options is there, again, just for today's expiry, not even counting Friday or any other chain. There's 3x, right? 3x just from here to here, which is 411 puts to 405 puts and 409 call to 416 call. There's 3 times as much premium or dollars transacting. And that's significant. Let's also look at the final hour here and try to understand what's happening. So let's look here. Oh, why in the last 10 minutes does it do that? Well, that's because that's the closest time to expiry. So we're over here at 412. They're like, engage the bids. Engage the bids. And again, everyone's fighting for direction. That's when all the volume comes in. Maybe now you better understand what might actually be happening in terms of the price action. Yeah, it's really choppy until it isn't. We're fighting for direction until we're not, because people are motivated only to buy and sell based on the closing price. And again, that's where I'm calling this a reluctant rally, because look, no one's excited to hold overnight, even when we get a red close gap up, get a red close gap up, get a green close gap down, get a red close gap up. Man, it kind of seems silly to sell the close. Every time there's a big fat red close, we gap up. Every time we get a big close, we gap down. Whoa, this is like really funky. Yeah, it's really funky. And it's now going to start to get exacerbated or emphasized because now we also have quantitative tightening beginning. Yay! So now let's look and see whether or not we are climbing the wall of worry. We went from extreme fear, and now we're on the cusp of getting out of extreme fear into only being fear. So what this tells me is that we're climbing the wall of worry. People are getting less emotional as we start going off the bottom, even though we're red. And I can see that here by yesterday being a 21 reading, today being a 25. So I think that people have already done the work to manage their risk. And as I look at the chart here, I'm hearing a lot more people calling for a short-term bottom. And there's the video at the end of the video. Sorry, the video at the end of the stream that'll queue up to show you my deeper thoughts on the weekend. But what I want to look at next is just going to be, again, what is a wall of worry? Might be about 3 more minutes. I want to look at some charts too, so I'll take as long as I want. Wall of worry. Wall of worry is the financial market's periodic tendency to surmount a host of negative factors and keep ascending. Wall of worry is generally used in connection with the stock markets, referring to their resilience when running into a temporary stumbling block rather than a permanent impediment to a market advance. What about the Fed? What about we're hearing from Bullard, right? What about Sheryl Sandberg stepping down from Meta today? Stock went down 3%. What about Nvidia having arguably bad earnings last week? Went up. So the market is climbing a wall of worry, and people are getting less scared the higher we get. That is bullish. But the Bears have scored a touchdown. So like, WTF, Justin, what do we do? I don't know. I don't know what to do. Right? I'm just a guy on YouTube pretending to be smart. So now let's look at the heat map here. And let's also look across some risk assets, because it's been very tough to try to find direction for crypto, right? Up 10%, down 6%. We had an interest rate decision getting raised by the Bank of Canada today. It's adding fear that the Fed is going to have to go faster for longer, and it's not looking all that great. So, right, let's quickly check in here on BTC and ETH. BTC, right, still green on the week, believe it or not. Rejected though, right? And still the buy pocket still. I don't know what to do. It's got a lot of volume on the weekly already for this time of the week. And again, it's in the supply pocket here. So every previous time we've gone in here, again, they buy. This time, not so sure. Hammer with inverted hammer, WTF. I don't know what's going on here. I don't know if it's going to go up or down. No idea. ETH, a lot closer to support than resistance. This is not green though, and volume's already high. We got capitulation volume and then a fresh dump. Lower highs, lower lows. That's textbook bearish, so probably going to go lower. Right? Probably going to break down here and go down. I don't know for sure. Still has time to snap back, but it's indicating to me that it probably wants to go down. Now, as we look across here, are there any leaders? While SPY and QQQ are roughly tracking percent-wise, so down by roughly 0.8 and 0.7. SPY still looks okay. These right here come from our volume profile, where we're looking at the supply and demand zones going back to pre-lockdown areas, and we're kind of in no man's land. We hit the first pocket of supply and backed off. That's basically the story. All right, now let's have a quick look at QQQ. QQQ is still pretty resilient, right? Holding on to those previous lows or the green line here. We can note that here by looking at the 3035 area, green line, green number. That's how you know what we're looking at. So it's looking okay. It doesn't look super bullish. SPY is still higher. It's technically stopped going down. I would say it's going sideways. So we were going down. Now we're going sideways. We have to actually form an uptrend for us to actually keep going higher. So technically going up, but higher high, higher low. I don't know, right? I'm confused. Dollar also had a huge move today, right back inside of its supply pocket. So whatever this does is definitely going to move us. Again, remembering that if DXY goes up by 0.75, it means QQQ and SPY should be down by 0.75. And then just quickly checking in on a few more things here again, looking at the heat map, Apple, Microsoft, Google, Amazon, all the biggest companies in the stock market treading water. So the leaders are ready to lead, but the market has to give it the all clear. And then finally looking down here at the ETFs, ARK down a lot, 3.6. XLF down 1.6, XLV down 1.4. And the Russell only down by 0.5%. So we're getting a lot of mixed signals here. And I think just because the video is already 20 minutes, I did go through on the weekend and talk about all these trillion-dollar companies, every single ETF. So if you enjoyed the video, I encourage you to smash a thumbs up and drop me a comment. Otherwise, the video that's queuing up right now will be your best bet to try to understand exactly what I was thinking going into the weekend. Otherwise, thank you for watching. I look forward to seeing you tomorrow.